Joining us for more on Groupon's amended S-1 filing is Noah Hagey, managing partner at Braun Hagey. Noah is a regular advisor to hedge funds and private equity firms on litigation risk and strategy, and he has special experience when it comes to enforcement of SEC regulations. Great to have you back here on the show, Noah. So first of all, this ACOSI thing. It's been very controversial. It's a term that Groupon essentially invented. What's your take on the fact that this is not fully gone from the S-1 filing?
Well, clearly the Securities and Exchange Commission had issues with this metric, and Groupon, being the size of offering that it is, gave Groupon a couple of opportunities to try to explain itself in a way that would be discernible to investors. The fact that it remains in the document may raise some concerns with the Securities and Exchange Commission going forward, which is going to continue to issue comment letters to Groupon regarding the metrics that it says are important to its internal review.
So inside the SEC right now, how are they reacting to this?
Well, they might be expecting it. Quite frankly, the amount of time that the Division of Corporate Finance has had to correspond with the analysts and the internal advisors for Groupon has been quite long in this period. What we expect to see is probably a further evaluation of whether the company is selling itself as having GAAP metrics. And they are saying to the market now, having removed some of the adjusted CSOI from their registration statement, that we actually don't believe it's entirely valid for you to rely on that metric. The fact that they continue to weave it into some of their financials, though, I think could raise further concern for the SEC.
Now let's take a closer look at how Groupon is selling itself. Every time Groupon amends its filing, it seems the company gets more unattractive. I want to read you a quote from Rocky Agrawal, a blogger and consultant who's been closely following this company. He says the key takeaway from Groupon's amended S-1 is that the company's best days in terms of revenue are behind it. Groupon has been selling investors an aggressive growth story. That story is collapsing. Can Groupon really control the story anymore now that the SEC is involved?
Well, look, Groupon, wanted to make a splash with this IPO. They wanted to make the registration statement a marketing event in and of itself, and they chose these sort of Orwellian metrics to describe how they were looking at their own internal financials. And so when you couple that with statements that were being made in the press, for example, that the company was going to be wildly profitable, it could leave investors, and I'm certainly the SEC was taking a look at this, lead investors to consider whether or not the company had some secret plan to be able to drive profitability, real profitability. In short, the answer to your question is I think that the metrics that they were using have collapsed. And now, if you look at the actual indices that are in the new registration filing today, they're pretty much all negative.
And at the very least, I think a lot of people have been saying they are confusing. Noah Hagey, thank you so much for joining us for your thoughts today